G'day everyone, it's Matt and Rebecca here with another episode of Building What Matters, where we try to help you understand your money a bit better and make the future a little less scary. Rebecca, we're back again.
Hello, Matthew. Let's do this.
All right, this has been added to our list because everyone wants to know more about the budget.
Look, I didn't think I was going to be fun at barbecues for this topic, but I'm very popular these days.
That's a very interesting topic. Tell us about, firstly, about 6 weeks since it's been handed down, 7 weeks maybe.
Yeah, longer.
How has the sentiment changed and where are your current client conversations at?
It's not as like vox poppy clickbait, like, ooh, that's, interesting and dramatic. Everyone's like, okay, this is happening, right? Like the government is very committed to pushing this through quickly. Some might say too quickly. Some might say the word rushing. But it is like the train has left the station. And so conversations are now very much anchored in like, what does this mean for me? What are the bits that are actually important and what is just the noise?
Before we go any further, one thing I need to say is our general disclaimer around this all being proposed in some form of implementation, but effectively the execution hasn't really started. So some of what we're talking about is actual, some about assumptions, some's about our inferred political beliefs, but we'll do our best to make sure that it's okay.
We'll try and keep it pretty neutral and what is like at this point in time, what we can reasonably anticipate is going to happen, albeit, as you said, with the disclaimer, things can still change.
Great. So those conversations are happening. Feels like there's a little less fear, but now it's sort of into the so what.
Yep.
So for our clients, so what?
So what? There was a small group of our clients who were actively in the process of looking for an investment property to purchase, and they have had to do a quick stop, right? They are, like, if you think about the cohort of our client base, I'm talking like 5%, right? And they were the ones who, after the budget got handed down, like we were on the phone to first to say, everyone just cool your jets for a second. And the reason for that bit is because unless it is a new build, negative gearing changes are substantial if you take them out of the equation for most people buying an investment property. So for that very small group of people, this is something that you want to pay attention to immediately. Everybody else, generally, though, we've got a bit of time to have a think about what this means for us, and it's probably a more gradual change rather than a big...
Great. So that's negative gearing. Intertwined for those people, but also for everyone, is capital gains tax.
Have you ever heard the word CGT or acronym CGT used more in your life? Like
no. What does it mean and what's the fear for people with these changes when it comes to investing?
I think the fear is that they're just losing copious amounts of money because of a government decision. That's not to say that that's correct, but that's the fear. Just like a lot of people don't understand the marginal tax system for income. They think when they go up a little bit, they're just going to be worse off.
Don't want to take a little bit of extra shifts or get a pay rise because it's going to make me pay.
Exactly. So the changes of capital gains tax are reasonable, but they will be, the impact of it, like the dollar impact of it will be more dramatic over time. It's going to be pretty uneventful in the short term.
One of the things that I think is really important for people to understand is that everything that is in place and feels so comfortable and so certain at a point in time didn't exist. For those of us that are old enough, things like the existing capital gains tax regime or previous now hasn't been around forever.
I remember studying this at uni and there was 3 systems. It was like pre-1985 asset indexation.
21st of September 1985.
And the 50% discount. And like, I remember studying it going, who wrote 3 tranches of this tax legislation? This is already crazy. But at some point, everyone did wrap their head around it and go, all right, cool, we can work with this. So this is just the next evolution of that.
And completely agree. And the second part that's been really formative in our industry, but for Australians, is when Costello redid all the super changes. RBLs and a few other acronyms, whatever it meant, was like simplifying the super system was an absolute shit show for people around that sort of late 2000 and, 2008, 2009, 2010, but all of a sudden we get 15 years down the track and it makes sense.
Yeah.
So not saying that I agree with what's playing out, but the fear of what happens generally will dissipate in due course because uncertain becomes certain and people just hate it when certain becomes uncertain.
Totally. And look, I think there is also an overlay with like media literacy here. Like we have to understand that any change, like shitty news sells more than like hopes and dreams and rainbows. So the media view on any change is always going to skew negative. I don't recall any stories of people being like, great change, love that, this is going to be fantastic. It's always a bit more doom and gloom.
If you have to look at the budget that's been put out there into the ether, what are the strengths of it from your perspective?
You said don't get political in this episode. We're going to keep it tax-based. Look, I think it's interesting. Can I say that? Right? Like if you take away the right and wrong from a political landscape, it is interesting. This is one of the most interesting budget updates in decades. The government has moved from tinkering around the edges, and this is both the Labor government and previous coalition government, tinkering around the edges of superannuation and tax in non-super environments. Like this, they're having a real crack at shaking things up. The bit that makes me nervous is the fact that the impact that the government are trying to achieve with these policies will take years to play out, and there are always unintended consequences, like good and bad. We just, like we can't know that right now. We just have to wait and see.
So the good is that Jim Chalmers has been busy.
I don't think anyone who is like intimately involved with like tax legislation, tax policy, has been saying for the last few years, the system is great, don't change it. You know, academics, economists, like policymakers, everyone recognised something needed to change. I have no problem with a government saying, well, we're going to try and change it.
Yep. So change needs to happen. We're yet to see how that change that they've proposed will impact things.
And look, and don't get me started around like we've got demographic changes in Australia. We've got an ageing population. You have less people working. We have this tension between income being taxed and assets being taxed. Like there is a really, really complicated system, and there is no one policy that works for everybody.
Interesting. I mean, there's obviously opportunities in different markets. New construction builds. Mm-hmm. We know that there's not enough houses being built. Potentially, it could be a driver to making more of that happen. I worry that there's just a lot of uncertainty and there's a lot of noise, which makes people slow down and stop. Yep. But I think in due course, as people get more comfortable, they will do more.
Agreed. And take the idea we started today talking about like those few clients where we said just hold your horses on the investment property. That's not to say that we won't buy investment properties again. Like we absolutely will. It'll just look different and the market will adapt.
One thing that I think may potentially get overlooked when it comes to financial planning and certainly when it comes to capital gains tax is that one thing that isn't changing is the principal place of residence is maintaining its CGT free status.
Yeah.
So for those people that are looking to buy a home and move into it, no change.
Absolutely, play on. I absolutely loved, there was an article last month in the AFR and the example that they used, I'm not even joking, Matt, they were like, okay, if you're trying to make the most out of the system, you go buy a $20 million house and you put $5 million into renovations with it. And like that's the best possible outcome from tax management because you'll get the capital growth and it'll be CGT free. And I was just like, okay, who is reading this example and nodding along being like, great plan.
You know
I'm going to do that.
You know that a $5 million reno now is actually just the bathroom. So there's plenty that people are worried about.
Yeah.
What's next for people when it comes to making decisions based on these proposed, partly implemented, not executed announcements?
There are going to be some components of a financial plan that are just play on, right? So contributing money into super, play on. Generally like investment bonds, play on. property or any sort of gearing involved in your investments is probably like a stop and have a think moment. But a large part of the strategies with our investing philosophies, like they are play on. I think what comes alongside that is a healthy dose of, I think maybe a reality check for people around this concept of regulatory risk. Again, I started today talking about being fun at barbecues. I promise that I am, but regulatory risk is something that you're like, okay, that's just a really nerdy concept, but it's this idea that you can have a great plan. You can have a great financial system. Markets can be doing their thing, right? Like we've got no market volatility. There is always a risk that the government changes the rules on the system that you exist in. And you might be a beneficiary of those changes, or you might have to do a pivot.
And one of the things we've seen is compared to most other changes in the market, like interest rates going up or the investment markets having their ups and downs, regulation and legislation changes can be incredibly brutal and their implementation quick.
Yeah.
Which then puts people under pressure. I haven't mentioned this, but the one thing that I love about this budget is that it's going to shift and already has shifted people's thoughts around property. I am amazed throughout my 20 years of doing this how happy people are to get 5% of their money and throw it into an incredibly big and volatile asset and pay things like lender's mortgage insurance for the trade-off or the promise of some growth down the track, but with a whole lot of cost in the meantime.
Yep.
If that was in any other place, if it was business strategy, if it was fitness strategy, something that high risk would force people to take a step back and look at it more holistically, and it's doing that. So I love that. I don't necessarily love all the execution, all the noise, but I think that will be a wonderful place for so many people that are going into their financial journey, that this thing that was nearly like rite of passage, that in my opinion just burnt so many people, is now harder to do.
Yeah. I think that's also coming off the back of two other changes in the last 6 years. So one is, again, a reality check of interest rates and the humility that got forced down a lot of people's throats around rising interest rates and what it costs to service a loan, like whether it was their main residence or an investment property. And going back a few years before that, remember when COVID happened and lockdown, and like when we're in Melbourne, it was like, renters, if you can't pay your rent, that's okay, right? Just do your best during that period. And like, whilst I appreciate that it was like a 1 in 100 year event, that risk was amplified during 2020 through to 2022. And again, you take that and you put it into then a rising interest rate environment, into changes from a regulation perspective. Now, you are so right that our appetite and awareness and just like, property might not be as simple as mum and dad told me it was going to be when they told me I should go buy a house at 25.
Beck, one of the biggest threats to people's financial success they have no connection with, and they are people that sit in Canberra.
Hello to the people in Canberra.
I don't believe they're incredibly well educated about what they're talking about. As you said, there's unintended consequences. So how do people overcome that fear and anxiety of this part so personal to them, their success, their goals, their kids' education, their homes, being influenced so heavily by other people?
I think there's a lot to unpack in that. You go back into interest rate risk and what's happened in the last couple of years. It is a reminder that there is a time and a place to go up to your eyeballs, and there's a time and a place to leave wiggle room in your financial plan when it comes to debt and leverage. I think this is a humbling and important reminder that legislation risk, regulatory risk, get Matt to say that later, is real, and it is always there. It may be less eventful in some years, it may be quieter in some years, but it will always be there. And you must have a relatively loose grip on your financial plan. We say we write plans in grey lead. We do not write them in pen because things will always change. So that's for me is the takeaway is understand, like, maybe don't push it absolutely to the limit depending on what stage of life you're in. Be aware that things will continue to change. Like, we're not done, right? Like this isn't the last change and we just get to cruise now for the next 40 years. And if you're stuck, if you're in a tailspin on all of this, like get help.
Thank you for joining us on another episode of Building What Matters, where we do our best to make money seem a little less scary. If you do want to talk more about this, jump on the website, click the Book Now button, or connect with Rebecca or I on LinkedIn, and we'll go from there.